2014, 2015 were two of the 5 biggest years for venture capital fundraising in history.
Amazing. And everybody said the venture business was dying.
Yeah, and then all of a sudden, boom. Well, there's way too much money looking for way too little return. That's kind of the net. And so people are looking for more risk. A lot of risk in venture capital because risk equals return. Not always, but most of the time. And so there's been a ton of money coming in.
So because of the monetary policy that's going on in the world where you put money in your savings account and you get nothing. Or it seems like now they charge you fees. So literally, I forgot that I had a savings account.
Yeah.
And my wife's like, hey, Tomasz, Jason, you just realized you lost like $8 a month. You lost $120 with your Bank of America account because you had a savings account that had a minimum.
Oh,
and in the other accounts, you have all this other money. And if you just put like $1,000 in that account, you wouldn't have lost this amount of money. And I'm like, I am a Tomasz. But the people who are investing is also very interesting. I find like the Chinese are coming into Silicon Valley.
There are a lot of
hedge funds, mutual funds. They're dipping down. Why are they dipping down and investing in the Ubers, Airbnbs, and late stage companies?
Well, I think.
Or why did they?
They did because rewind 3 years ago, they started to invest in pre-IPO in the rounds immediately before the IPO because they figured they could get a better return than waiting until the IPO. There wasn't that much of a difference between a company raising a pre-IPO round and a company at IPO. In fact, a lot of these investors could ask questions of a private company that they could, questions that the company could disclose when they were private, but they couldn't disclose when they were on their IPO roadshow.
Got it.
So they actually know more about the businesses. And so then they started investing a lot in those rounds.
That's counterintuitive. You're saying when they're private, they had more access to data.
Yeah.
Or could, and probably more access to management.
Yep.
And when they're on the IPO, because there are these very long-standing rules, they get a little bit less access.
They get less access. And the challenge is, once a company discloses a metric once, or a key number once, the public market investors can continue to ask for that in the future.
Oh, really? I wasn't aware of that.
So, so I'm not too familiar with the disclosure requirements. This is what a late-stage investor told me. And he basically said...
So once you open the Pandora's box of, hey, this is our revenue per stay if you were Airbnb, or revenue per host, your investors have the right to, hey, you brought up the revenue per host 6 months ago. I haven't heard about that.
Yeah, and if you don't show it anymore... What's wrong?
What's wrong?
The metric must be going south.
Alarms start going off.
Sell.
Well, yeah, exactly. Hey, let's talk about your next prediction here. Let's pull up your deck here. So the first one you teed up. Okay, that's fine though.
Yeah.
So what's this next one here?
So the second one is that the public market is going to put pressure on prices in the private market.
The public market will put pressure on prices in the private market. In other words, whatever happens in the public market, if the stock market goes down, which it did in the fourth quarter and first quarter, we had some rough waters. People were very nervous.
Very nervous.
Would put pressure on the private market, and the private market absolutely correlated.
It did.
But a little bit delayed, like our sailor metaphor maybe?
Yeah, delayed, but only in the late stages, actually. So we have data for that. So this is
here we go.
Cooley's data on Series A, Series B, Series C, and Series D in later rounds.
Got it.
And this is the average pre-money valuation. So the value of a company before it took investment.
Got it.
Over the last 6 years.
Hey, everybody, we've got a great new partner on This Week in Startups, and I'm really excited about because it's a product that we're using here at This Week in Startups and launch, and it's called Design Crowd. You can go ahead and check it out at designcrowd.com and on Twitter at DesignCrowd. What is it? It is the best way to make a logo, a graphics, or web design for your business. It's an online marketplace where you can outsource or crowdsource, as you know, custom designs, and they have over 500,000 designers there around the world. Here's how it works. Very simple. You post a brief. What is a brief? It's basically like your spec. I'm looking for a logo for This Week in Startups. It's a podcast with a bombastic, aggressive, Brooklyn-born bulldog of a host, Jason Calacanis, but it's about technology and finance. And then you get feedback from 50 to 100 designers, sometimes even more. And then you give them feedback. So you look at the 50 or 100 designers' work and you say, you know what? These three speak to me. I like the bulldog logo. We used to have a bulldog logo in This Week in Startups. Yeah, let's play off the bulldog. And then I like this other person who's doing the skyline of New York and the skyline of San Francisco. Oh, that tells the story of Jason going from New York to San Francisco. Great. You give them that feedback. It motivates the designers. They give you more. And then you select the best one and you approve payment to that designer. It's a money-back guarantee. There are designers all over the world who love working on this type of platform. And their clients include the Harvard Business School, Forum for Innovation and Growth, Virgin, HTC, Absolute Vodka, Amnesty International, which was my first job out of school. I worked at Amnesty International as a microcomputer specialist, and 100,000 plus small businesses and entrepreneurs. Visit designcrowd.com/twist, and they will give you up to $100 on your next design project. Go ahead and visit designcrowd.com/twist and save up to $100 on your design project. And for the super fans, special mission, go ahead and thank @DesignCrowd on Twitter and Facebook, and I will like it and retweet it from our different accounts. Great way to engage and reward the partners who make independent media like This Week in Startups possible. Thanks again to our new partner, Design Crowd. Go ahead and try it. It's really good. Okay, let's get back to this amazing episode.